30th of May, 2023, Tuesday, MAO with Cal once again. Now, we've been bearish on the China stock market for the longest of time. I think that since the start of February, we've been bearish and we are staying bear all the way. The thing is this, today, we just saw the China A50 touch the 61.8, and that is where the market rebounded. So the question is this right now, is it time to go bull or bear? All right, I'll tell you more in detail. Let's go into this short video. All right, first of all, disclaimer apply as usual, and thank you, AIMS, for the kind sponsorship as usual. Now, last night, we have no US market. It was a Memorial Day. All right, it is a federal holiday in the United States of America, and for honoring and mourning the US military personnel who died while serving in the United States Armed Forces. Now, from 1868 to 1970s, it was observed on May 30th. Since 1970 onwards, it's observed on the last Monday of May, all right? So that's why the US stock market was closed, all right? Again, once again, salute to all these brave men and women. All right, so let's just do a flashback of China. Now, remember back then, about 8 months, 9 months ago, I was covering China really every day, talking about China, this COVID issue and stuff like that, and people get falling sick and people dying and stuff like that. So it was a flashback. And of course, everybody was basically saying that China is ridiculous, locking down people down, and then food was not even enough and blah, blah, blah. All right. So finally, China decided that it's enough. They decided to open and relax COVID policy. And that brings a lot of changes immediately, right? We all know that because of that itself, it was welcomed by foreign investors at the start, and it raises a lot of hope on the borders. And of course, business, economy, everything was doing good. And that's the reason why the stock market really pumped up, all right? So you can see that back then, the Chinese stock market was coming down all the way. Every day they was selling, and something just changed over at the start of November last year. And that was where we noticed that the buying came in. Of course, this buying was very, very suspicious because it's a very typical, more like government funds buying in. And of course, later on by the December, that was where they announced the policy change. So of course, that means that the news might leak out, and a lot of these bigger boys, they went in to buy and been buying a lot. And of course, when December news came out itself, the market was so happy with that, it went ballistic. So from 13,000, a very important number, 13,000, it went all the way to 14,300 to 400 area. Okay, so at that junction itself, everybody was happy, everybody think was good. But then again, that was where we came in. We say that no, we believe that this is not, because when you have a sudden open up of the economy itself, right, there will be a lot of problem. And we covered this back then in the MAO, so I'll not go back there again. So we were basically telling people that, look, be careful, the selling will start to come in, all right? And truth be told, by February, the stock market for China, after hitting a peak of about 14,450 around the area, start to come off. And then we've been very, very bearish on the market. So the thing is this right now, what is going on? Because we realized that the relationship between China and US has shifted goalposts. In fact, itself, just a couple of hours ago, China just turned down the US invitation for the defense chief meeting. All right. And apparently it's all right. De-risking is just decoupling in disguise. And they felt that right now there is a lot of pressure coming up, and they could face more pressure when the sides of the take between China and US. So the thing is this, what is happening right now? Because we all notice that China have been very, very close with Russia, which obviously is still attacking Ukraine. And because of that, US and the rest of the world gave in a lot of sanction, but China seemingly not really following the whole team, and of course been helping Russia, right? And of course now we all know that this new thing called BRIC is ongoing right now, and it's actually allowing people to use a yuan instead of the US dollar. Now that is going to compromise US position as a world leader, and this is not going to make US any happy. And because of all these movements since February, I felt that this will create more problem for China, and it seems to have really come true. And the thing is, right now, we all know that even the MBS, right, this Saudi prince is actually shaking hands with Xi Jinping, is allowing them to buy the crude oil in yuan. So all these actually tells America, they look, I'm not happy with you. And America said, look, okay, you're not happy with me, then let's go for it. And things is happening right now. That's because now we realize that the Chinese equity market is entering a bear market right now. In fact, it's all right. People be asking me to cover on China. I've been holding back, but today I decided to do it. Okay. So what we have right now is that this is crazy because the Hang Seng China Enterprise Index slumped 1.3%, taking a loss from January 27 peak to now very close to the 20th percent level, which means that when the peak itself, if the market pulls back more than 20%, technically we enter a bear market. All right, so we can see right now the Chinese stocks in Hong Kong continue to slide, and people are not very comfortable with what's going right now because they feel that the domestic recovery is not as strong, and basically the market now is having some fatigue, and they are looking for more monetary easing, or hopefully the US relationship with China gets better. But if not, it's all right, things will get worse. So the thing is right now, across the board, everybody is very, very worried because we are really coming down. And you can see from the chart, you can see that now the market from the highest point back in February till now, we are at the 20th percent level. And some China bulls are retreating in frustration, trimming portfolio allocation. As we all know that, remember this, when Warren Buffett actually cut away their positions, right? It's very clear. It's all this tension is going on itself. And that's the reason why he does that, I believe. And of course, we see a lot of this US top funds, billionaires cutting their portfolio in China because, again, itself is a lot of propaganda. And if this is going to continue, this is not good because now we can see foreign funds are the one that's selling most of the Chinese stocks since October, and this is likely going to continue. And because of that as well, people are now asking the big question, is it a good time to buy? So of course, people who are pro-China is saying that now we should see a brighter economic recovery in the second half of the year. Well, in all honesty, it's all right. I agree and disagree, and I'll show you why in my own opinion. Because now we just saw the China industrial profits tumble 18% in April as demand sputtered. So we know that now the thing is this, US is having recession problem. And US is one of the few countries that really relies a lot on China. And in fact, this is going to happen. So the thing is this right now, if the thing is that if people are not going to give orders to China, of course, their earnings, economy is not going to do well. And of course, again, being the biggest exporter of the world, definitely is how they need a lot of their goods to go out. So the good thing is this, if let's say US stands very strongly and firmly, nope, we don't want your product in a way, and the friends of mine shouldn't be following through, then we have a problem here. But again, if you look at it from another angle, if let's say now, if prices start to fall to a dramatic level, whereby the value becomes more worth it to buy in the China stock versus buying the American stock, then of course, investors, the smarter one, also to go in slowly. And that is whereby I believe that that may happen. Because now the figures are really bad. Profits are down by 20.6%. And of course, and you can see the numbers are showing that everything is shrinking, especially the profit side. So that means that the share price probably has tumbled quite a fair bit. So with all these economic figures and data from a technical point of view, it's all right, I'll share with you what am I looking at. But the thing is this, there's still a lot of pressure ongoing right now. Foreign funds saw their profit slide 16.2%. While private sector recorded 22.5 plunge, all right, that's a really, really bad numbers. So in short, it's our profit sacked for 27 or 41 major industrial sectors, and this is not good. So a lot of this very negative news coming out, and I feel from Bloomberg especially, because we know that why, right? Obviously, there's a lot of propaganda, even on the media side. But if you look at it from the technical view, then maybe we see it from another angle, all right? So let's look at the China market now. This is back in 2018, before we had that so-called slam dunk during the COVID period. So of course, China market, China A50 was at 10,300 back then, and it went all the way up to the high of 20,400. That was amazing. And the thing is this, that was also during the COVID time, which is really incredible, very impressive. But after that, when we all know that things started to happen and China market kept going down, every wave got worse and worse. But the thing is this, if you look carefully right now, there is a very strong artificial base somewhere at about 11,800 area. So that's an area that I'm actually looking at very closely. So if you look at the Fibonacci rate, I'll show to you in an expanded view, you can see that there's a lot of what you call sideways movement between 13,183 to 12,700. All right. Now the market has pulled back to 61.8. This could be a very interesting point to watch out for. Okay, so let me just give you the big view right now with the charts, if you see better. So you can see now the thing is this. I have been telling you guys that the 13,000 psychological level is very, very important. And you can see on the chart on the screen right now, this is the 13,000 level. Let me just bring it to you. 13,000 is here, denoted by this gold colored horizontal line. So you can see that every time the market hit the 13,000 back in 2022, the market will rebound. Then after that, in September, that's why it break down and it went all the way down to 11,155. Then, of course, what happened is that there was huge funds coming in to buy, and that propelled the market back to about 14,400 area. Okay, so now with 11,155 to 14,400, we do a Fibonacci, and you can see that this is amazing. Let me just show it to you now, and you will know roughly know what am I talking about it. Okay, so we have the Fibo number. Okay, so let me just bring it to you. This is the Fibo number here and here, and the thing is this. You can see that the market came down beautifully at the 50th percent level and then rebounded. And you can see that the moving average itself, right, the MA200, the MA200 and MA30 was so closely knitted for almost 3 months. Then after that, we noticed that the market caved in because of the US having concern, and that's where the market broke below 13,000 after struggling for many days. Then now it came down to the 61.8, which is a very important Fibonacci figure. Okay, so now this is the number. If the China A50 can stay above 12,400, well, this can rebound all the way back again to 12,800, okay? So about 400 points recovery. But if the China A50 counter breaks below 12,400, then gosh, this could really bring it down all the way back to 11,155. So if you ask me, it's all right. To me, it's very simple. For those who want to do bottom picking, you can try now to buy some, and with the first target at 12,800, and hopefully it stays there so that it can go back above the psychological level of 13,000. But if the market failed to stay above 12,400, then I believe that with the US selling, with the US interest rate factor, with the inflation issue now right now, I can tell you this, there's a more chance to see 11,155, unless the Chinese government come in again and do the pump up like what they did before. But based on chart itself, once the market lose 12,400, it's going to be quite very difficult to do that. Yeah. So that's my view here. So what do you think? Let me know in the comment box. It's Cal signing off. Have a great time. Bye-bye.